Well, what if there's a way that you buy gold so that your money can actually stay growing every single day? Not only does your money grow every single day, that money, in terms of that growth, is actually not taxed. It's private and it's contractually guaranteed with a unilaterally binding contract. Are you concerned with what's happening in our Canadian economy? Or maybe you just want to diversify your wealth with buying some physical gold, silver, or other precious metals. Well, whatever your reason or rationale is, that's not the point of this video. I'm actually not here to give you any investment advice. The purpose of this video here is for if you are interested in buying gold, silver, or other precious metals. I'm actually more specifically going to talk about gold in this video. You're normally accustomed to paying for gold using cash. And when you do that, you actually give up the compounding growth of your cash, especially if it was saved in someone else's bank, when you convert that to buy the gold. So if you actually want to learn more about it, it does start with making sure you are properly set up. And this means instead of using money from someone else's banking system, you're using your very own banking system that needs to be set up. And if you really want to learn more, make sure you visit watchibc.com for a free 90-minute training. And now, once you have your banking system set up, you get the choice as being the banker to be in control of that money. When you are in control of that money, you get to decide where you deploy the money. And in this circumstance, where we are going to deploy it is purchasing gold. So let's use an actual example of when I've purchased gold in terms of using the infinite banking concept. What you see in front of you is actually a price of gold per ounce in US dollars. So if we take a look at the historical price, and there's a particular reason why I chose November 1st and November 29th. This is based on a range that you'll see here in terms of when the purchases were made, at least the price range of when the prices were entered into. And so at the end of November, a purchase was made. And if we look at where we are today at the end of March, you'll see today is March 28th, 2022. You see the price of gold per ounce has shot up from 1764 per ounce to 2073. 69 per ounce, and it comes down, doesn't matter. Nonetheless, it's much higher than where it used to be. Now, this is not, again, about trading. I just wanted to show you the price chart for gold. And now, why am I showing you the price chart? Now, I also want to show you another item. So that was just the price chart of gold. And based on the timing of when that was purchased, you can see the price has gone up from the 1764 to the almost $2,000 per US ounce. And that's what normally you may have done if you taken cash and purchased the gold, meaning you converted the cash, you gave someone cash, and they gave you gold in exchange for that. And you're probably excited because the gold has gone up compared to what you converted your cash for. But what you can see is cash only had one job. That one job was used in the sense of purchasing the gold. What I want to show you is another way of purchasing gold. You most likely have used money that you have saved in someone else's bank to purchase the gold. Well, I'm going to show you if I just change the process of buying gold from my own bank and show you what that would look like. This is you. If you're like most Canadians, you work for your money and it gets deposited into someone else's bank. When it's sitting in someone else's bank, the value of your money is being eroded away by inflation because the government and central bank is printing more money. So to protect yourself from losing value in your money, you decide to buy gold with it. And the way you buy the gold is you withdraw your money out as cash from someone else's bank to buy the gold. And in doing so, you give up the future compounded growth of your money when you buy that gold. So instead of building your money in someone else's bank, let's change depositing your money into your own bank, which is a properly designed participating whole life insurance contract. Unlike your bank accounts, these contracts are private between you and the insurance company. While the cash values in these policies increase every single day, you can still access this money to buy your gold. By just changing the way you deposited your money from someone else's bank to your bank, not only is your money in your own bank increasing every day, you also were able to accomplish your objective of buying your gold. So let's look at an actual policy that has been properly designed. And so this is the example where money has already flowed into the policy and money has already accumulated to be used. So I'm just going to share that example here. So what you see in front of you is actually a properly designed whole life insurance policy looks like. And this would be as of November 8th. And what you can see is the loan available on November 8th was $17,394.25. Now let's move over to what the cash value increase on this policy would be for its current policy year. So in this current policy year, if I take a look at it, so now it's November 9th, which you can see, and on November 9th, that value moved from $17,394 to $17,408. So that means that the total cash value that has increased in the policy that could be used as a loan has increased to $14.18. That means every single day in this particular policy anniversary year, the loan amount increases $14.18. So money has gone into this policy and the cash values are increasing every single day, $14.18. So why is that important? Well, let's take a look at if we took this same amount of money to go buy gold again on November 9th. So now you saw that a properly designed participating whole life insurance policy for this particular individual has increased $14.18 based on their design specifics around that. Let's look back at what that price of gold was during that time of the transaction. Okay, so let's recap the price of gold back in November. So once again, you see that same gold price chart. And the price value at the time of November 8th was around here when that purchase was placed. That purchase was placed at this price point here. And you can see by November 29th, the price point was hit. So this whole range is where the price point would be hit. And so again, once that price point was hit, the price of gold has shot up to the high of 2070.42. So when gold was purchased, now you see the same price. Again, no different than the original scenario where you've just taken cash in your bank account or your savings from someone else's bank to purchase gold. The only difference now is this money is coming out of the banking system designed for that particular individual. So if we take a look at that particular individual, let's take a look at the economics of it. Now, what you see in front of you is a chart related to the purchase of gold. So initially, the cash value that was existing on the chart is cash as savings was $17,394. And on November 8th, so when the purchase was made, $16,000 was actually spent on purchasing the gold, and then the remaining $719 sat in the loan available. Now, if we combined those amounts together, that is what that $17,394 plus the 14.18 increase per day. And if we go over each of these days, this gray line you see here is actually the gradual increase of the combined value as the price of gold goes up, plus the gradual increase from the loan available. So you see initially started at 719 on November 8th. Now, as of 3 days, that has increased from 719 to 753. And so this plus the price of gold equaled to combined the net increase of 17,536. So now let's look at from when November 8th, when that purchase was made, and let's look at how the price has moved in alignment with gold. So the loan available would have increased even more. And the price of gold, as you saw from the price chart, has also increased. What does that outcome look like? Now, if we look at the outcome of the gold from here, and again, using the same pool of money, now it's been pulled into the banking system, which was a properly designed participating whole life insurance policy to purchase gold. So again, on the November 7th, then the order was placed for the gold on that November 8th. And then afterwards, so price has now increased for gold, from here to here, from the original 16,675 has now increased to the 17,680. We can also see the cash values, which is represented by this orange line, started at 719, has also increased every single day up until the end of March to 2,194. So together, just doing this in isolation, you can see combined, the 719 plus the 16,675 has increased from the combined total 17,394, which has also increased to 19,874. So let's look at some of the numbers together just to see the comparison of using your money in a different way and showing you the outcome as if you just use direct cash to purchase the gold, or if you use the money from your own banking system. So let's take a look at both of these comparisons in terms of using cash, which is what you're normally used to, where you've saved the money in someone else's banking system, withdrew that money to go buy the gold. So at that time, again, on November 8th, 2021, the price of gold times the amount of money that was available, that you, again, using equivalent amounts of money available, the price of gold times 7 would be 16,675. And the price as of March 23rd, 2022, combined for the same 7 units held, 7 ounces held, would be 17,877 for a profit of 1,201, final outcome of 1,201. Let's take a look at if the outcome was, if the money source came from your banking system, which you initially funded and built up with a loan value, with a loan available of the similar amount. Now, if the loan available of the similar amount, therefore you can see that the amount should be the same. 7 units for 7 ounces of gold is 16,675, 11/8/2021. And afterwards, if you remember from the screenshots, the daily loan available was increasing $14.10. Well, on that $14.10, because the money was accessed via a loan, there had to be interest paid on that loan. So 16,675 times 6.2% simple interest would be 1,033.85. And if we divide that by 365, the interest is 2.83. So for a net growth in the loan available is going to be $11.27. So again, money was put into this policy that grows $14.10. To use the amount of money that's available, it would cost $2.83. So for a net increase of $11.27. Now, if we now look at that, the outcome in terms of using the cash from your own banking system was 1,201. And now, if we look at it, since the money has just been accessed and it's staying in your banking system, growing every single day, except you've now accessed it via a loan, where it's going to cost you $2.83 a day. Well, if we took that 11.27 and grew that times the amount of days from November 8th all the way to March 3rd, that amount of increase is 14.87. So combined, the values add up to 26.89. So for the same amount of money that you're accessing, which is 16,675, because of the source and how you initially started with, where it's coming from, without interrupting the compounding, you can see the opportunity cost that has been given up. So all you get for that first source of money that came from someone else's banking system and the savings was 1,201. But because your money came from your own banking system, which you are not, and when you access the funds, you are not interrupting the growth, even though you have to pay a cost, in this example of $2.83 combined, you'll still get to benefit from the same outcome, but at the same time, since the money is growing uninterrupted, the amount of loan available is also going to increase 14.87. And guess, if we take a look at that together, comparing this over this is 124% difference. So what could you do with that extra difference? Well, when the 14.87 continues growing eventually, so let's say by March 25th, the price of gold is in Canadian dollars 2,552.95, so that 1 ounce of gold. Well, if you just stay there for a few more months while the price is increasing, by the way, tax-free, you would potentially be able to purchase another ounce of gold and compound that growth even further. If you were to change your process of funding gold using your own banking system, because the platform is a participating whole life insurance policy, you're also going to get access to what's called a death benefit. So if you pass away, you would get a death benefit of approximately $712,235. Now, if you did it following your original method of using cash from your own savings account, if you were to pass away, what you would be left behind is only $17,877. So not only is your outcome significantly larger than your original one, but if you were to pass away, you would also get a $712,325 as a death benefit, as opposed to whatever the value of your gold would be. So let's take a look at this. You initially had money in someone else's bank and you used it to purchase gold. That gold, in the example that I shared with you, has increased. Now, with the money that has instead coming from someone else's bank is coming from your own bank, which is this properly designed participating whole life policy. And where the values have accumulated, you've taken the money and purchased gold with it. And so not only is your banking system cash values growing every single day, so is, in this particular example, gold. So you have two assets growing for you with the same pool of money. Whereas here, you only have one. In case you didn't know, this is a properly designed insurance contract, and therefore you also get access to a death benefit. So despite the concerns of the value of the fiat currency going down, you've locked in your money against the value of gold. Any volatility in gold prices are protected or enhanced with the increasing cash values from your banking system. Any devaluing of the currency is being covered against the value of gold. So you've also transferred the risk of your death to the insurance company with a high death benefit. Now, if you're new to understanding the benefits of gold, you can also access the liquidity in gold by collateralizing it for legal tender, in this case, the fiat money system or the Canadian dollars. By structuring the use of your money this way, you've now financially engineered a hedge against the printing of money from the government and the central bank. Now, you've indexed the value of your life policy against gold. Once again, this is not an investment advice. This is only meant to show you creative ways in which you can purchase gold if you like what you see. Remember, this all starts with getting set up with your own banking function as it relates to your needs. If you really want to learn more, please visit watchibc.com for a free 90-minute training. And until then, please subscribe to our channel and I'll catch you later. See ya.